Hey everyone, and welcome back to the channel. Today, we rediving deep into a topic that has been lighting up the financial world: Amazon. You might think of them as the giant online store that delivers everything to your doorstep, but there's a powerhouse engine under the hood that's really driving their success, and it's sending their stock price to incredible new heights. We're talking about Amazon Web Services, or AWS. So, what's all the buzz about? Recently, Amazon's stock has been on an absolute tear, and a huge part of that momentum is coming from its cloud computing division. It's a classic case of what's hiding in plain sight. While we're all busy adding things to our carts, AWS is quietly powering a massive portion of the internet, from your favorite streaming services to major corporations and even government agencies. This isn't just a side hustle for Amazon, it's a colossal, high-margin business that's now getting the spotlight it deserves. In this video, we're going to break down exactly why AWS is so crucial, what the latest earnings reports are telling us, and most importantly, what the top Wall Street analysts are saying about Amazon's future. Is this surge just a temporary blip, or are we looking at the beginning of a new era of growth for one of the world's biggest companies? Let's get into it. First, let's set the stage. For a long time, the narrative around Amazon was dominated by its e-commerce business. Investors and the public alike were focused on Prime Day sales, warehouse logistics, and competition with retailers like Walmart and Target. And for good reason. It's a massive operation. But Wall Street has been shifting its focus. Why? Because while e-commerce operates on famously thin profit margins, think just a few cents on the dollar, cloud computing is a different beast entirely. AWS boasts operating margins that are often north of 25%, sometimes even hitting 30%. That means for every dollar of revenue AWS brings in, a significant chunk of it is pure profit. This profit is what fuels Amazon's ability to invest in other ventures, from AI and robotics to its ever-expanding logistics network. It's the cash cow that feeds the entire Amazon empire. Recently, Amazon released its quarterly earnings, and the numbers for AWS were a showstopper. The division reported revenue that didn't just meet expectations, it blew past them. More importantly, the growth rate, which had been a point of concern for some analysts in previous quarters, showed a clear re-acceleration. This is a critical signal. It tells the market that the demand for cloud services is not only stable, but is actually picking up steam again. Companies that may have paused their IT spending due to economic uncertainty are now back in the game, and they're spending big on migrating their operations to the cloud. And right at the heart of this boom is the explosion in artificial intelligence. This brings us to the main event, the analyst reactions. When Wall Street experts see this kind of performance, they take notice, and their reports can move markets. Let's look at what some of the big players are saying. Analysts from major banks like JP Morgan, Goldman Sachs, and Morgan Stanley have all come out with overwhelmingly positive notes, reiterating their buy or overweight ratings on Amazon stock. A common thread in all their reports is the AI tailwind. What does that mean? Essentially, they believe the AI revolution is just getting started, and AWS is perfectly positioned to be one of its biggest beneficiaries. Think about it. Developing and running powerful AI models, like the ones behind ChatGPT or image generators, requires immense computational power. Where do companies get that power? They rent it from cloud providers, and AWS is the undisputed market leader. Analysts are highlighting that the demand for AI-related cloud services is creating a new, massive wave of growth for AWS. They're not just providing the storage and computing, they're also offering specialized chips like their own Trainium and Inferentia chips, and platforms like Amazon Bedrock, which make it easier for businesses to build and scale their own AI applications. This creates a sticky ecosystem. Once a company builds its AI strategy on AWS, it's very difficult and costly to switch. One analyst from Bank of America put it very clearly. They noted that the commentary from Amazon's management was incredibly bullish, suggesting that the growth we're seeing now is just the tip of the iceberg. They've raised their price target for the stock, predicting that the combination of accelerating AWS growth and improving margins in the retail business will create a powerful 1-2 punch for profitability. They see the AI workload revenue stream growing from a small base today to a multi-billion-dollar business for Amazon in the coming years. This isn't just speculation, it's based on the contracts and commitments they're seeing from enterprise customers. Another key point that analysts are making is about operating leverage. It's a bit of a technical term, but it's simple to understand. As AWS's revenue grows, its costs don't grow at the same pace. The initial investment in data centers and infrastructure is huge, but once they're built, each new customer adds revenue with very little incremental cost. This means that as revenue accelerates, profits accelerate even faster. Analysts at Evercore ISI emphasized this point, suggesting that Wall Street is still underestimating the long-term margin potential of AWS, especially with the added boost from high-value AI services. They see a clear path for Amazon's overall profitability to surprise to the upside for many quarters to come. Of course, no analysis would be complete without looking at the competition. Microsoft's Azure is a formidable number 2 in the cloud market, and Google Cloud is a strong number 3. Both are also benefiting from the AI boom. However, analysts are pointing out that the market is big enough for multiple winners. Furthermore, they emphasize AWS's first-mover advantage and its sheer scale. For over a decade, AWS has been the go-to provider, building a level of trust, a feature set, and a global footprint that is difficult for competitors to replicate. While Azure is closing the gap, particularly by leveraging its relationship with OpenAI, many analysts believe AWS's focus on providing a broad, flexible platform for all types of developers gives it a durable competitive edge. They argue that Amazon's customer-obsessed culture translates directly to AWS, where they are constantly innovating and adding new services based on what their clients need. So, let's tie this all together. The reason Amazon's shares are soaring isn't just because of one good quarter. It's because of a fundamental shift in how the market values the company. For years, it was viewed primarily as a low-margin retailer with a profitable tech business on the side. Now, the script has flipped. Investors and analysts are realizing that Amazon is, at its core, a high-margin technology company that also happens to run the world's most dominant e-commerce platform. The re-acceleration of AWS growth, powered by the insatiable demand for AI, has unlocked a new narrative. Analysts are recalibrating their models, increasing their price targets, and forecasting a future where Amazon's profits grow much faster than previously anticipated. The consensus is that the company is entering a new phase of growth, one that is more profitable and more durable than its retail-focused past. The soaring stock price is simply a reflection of this newfound optimism about the power and potential of its cloud kingdom. It's a testament to the incredible foresight of building AWS and a sign that its most profitable days may still be ahead. And there you have it, a breakdown of why Amazon's cloud business has Wall Street so excited and why its stock is reaching for the sky. The story of AWS is a powerful lesson in long-term vision and the incredible economics of the cloud. It's a narrative that's still unfolding, and you can be sure we'll be watching it closely. What are your thoughts on Amazon's future? Do you think the AI boom will continue to fuel AWS's dominance? Let me know down in the comments. Thank you so much for tuning in today. If you found this breakdown helpful and want to stay updated on the biggest stories in tech and finance, make sure to hit that like button and subscribe to the channel. Don't forget to ring the notification bell so you never miss a video. Thanks again for watching, and I'll see you in the next one.